Welcome back to the channel. Palantir reports second quarter earnings this Monday after the market close, and the stakes could not be higher. Palantir is actually my single largest individual stock holding across all of my portfolios, so you know I am watching every line item of this earnings release with extreme scrutiny. Today we are breaking down the critical growth metrics that actually matter, why Palantir's business model is pulling away from the software competition, and my complete portfolio playbook heading into Monday afternoon. First, let us dive into United States commercial growth. This is the ultimate engine driving Palantir's valuation and market expansion right now. Wall Street will be laser-focused on customer adoption of their artificial intelligence platform, or AIP. What sets Palantir apart from every other tech company is their AIP bootcamp execution. Instead of traditional, slow enterprise sales cycles that take 6 to 12 months, these intensive bootcamps allow potential enterprise clients to deploy working AI agents on their own proprietary data in just a few days. This hands-on process has drastically accelerated contract conversion rates and exploded commercial deal volume. Furthermore, Palantir's software is not just a surface-level tool. It integrates directly into an enterprise's operational core and ontology. Once a business embeds its core operations into Palantir, switching costs become astronomically high. That creates an expanding competitive moat, massive pricing power, and accelerating high-margin revenue expansion quarter after quarter. Second, we have to examine the government side of the business and Palantir's rock-solid balance sheet. While commercial expansion grabs the spotlight, defense and government contracts provide an incredible financial floor. Long-term partnerships with the Department of Defense, along with mission-critical defense analytic systems, deliver highly predictable, recurring cash flows that safeguard the business against broader economic headwinds. On top of that, Palantir operates from a position of absolute financial power. With over $4 billion in cash and short-term investments and zero debt, the company maintains complete strategic independence. Their track record of sustained GAAP profitability, combined with a Rule of 40 score that routinely crushes software industry standards, proves that Palantir is not just growing top-line revenue, but generating massive free cash flow while doing so. Third, let us address Wall Street's expectations, whisper numbers, and forward guidance. Because Palantir trades at a premium valuation multiple, simply meeting official consensus estimates is rarely enough to satisfy short-term market momentum. Wall Street demands a classic beat-and-raise performance. Analysts will be looking closely for upward revisions to full-year revenue guidance, expanding operating margins, and continued growth in remaining deal value. If Palantir delivers strong quarterly numbers but provides conservative guidance, short-term traders might use that as an excuse to take profits and trigger temporary pullback volatility. As long-term investors, understanding this valuation dynamic keeps us grounded so we do not react emotionally to brief post-earnings swings. Finally, here is my personal playbook for Monday and beyond. Palantir remains my largest core holding because I believe they are building the foundational software operating system for both modern enterprises and defense institutions. I'm holding my main stock position with full confidence for the long run, letting this massive growth story play out because I believe this big AI shift is just getting started. As a secondary strategy on those holdings, I selectively sell out-of-the-money cash-secured puts and covered calls at key strike prices to collect additional passive income. If the stock surges post-earnings, my portfolio benefits from the upward momentum while collecting extra options yield. If short-term market noise creates a temporary dip, I welcome the opportunity to generate option income or systematically stack more shares at a discount. I strictly sell options rather than buy them because that strategy puts time and option decay squarely on my side. Now I want to turn it over to you. What do you think is going to happen with Palantir's earnings this Monday, and what is your plan for your portfolio? Drop your thoughts in the comments below. If you enjoyed this video, hit the like button and subscribe so you don't miss my full post-earnings breakdown as soon as the numbers drop. Thanks for watching, and I will see you in the next one.